Good afternoon everyone, Philip from Black Bull Markets here. Hope everyone's doing well. In this video I'll be taking you through just how to use Fibonacci in trading. So Fibonacci is a very big part of trading. A lot of technical analysis gets used in trading. So this video is a tutorial on how we're going to teach you how to implement Fibonacci levels in your trading. So where did Fibonacci come from? So Fibonacci was a man, Leonardo Fibonacci was a 13th century Italian mathematician who discovered that many elements in our daily lives follow a predictable sequence. Traders use the same concept to plot sequential levels of support and resistance following reversals from previous trends. The use of Fibonacci can be quite simple or quite complex, and can be used for spotting support, resistance levels, or used to confirm stop-loss positions. But we will cover that in our education series. So the next one is what levels do we use as traders? So the levels we will be using is 0.0, then there's 0.236, 0.382, and there's 50%, and then there is also 0.618. Sorry, so 50% is essentially as well 0.5, and then there's the last one is also 1.0. So the rest of these will all be multiples of it. Now, what I mean by multiples is, these will all rather be, instead of 0. For example, 0.618, we will have 1.01618. Sorry, 1.618 or 2.618 and so on. So how do we get to these levels? Now, it's quite a little bit, this is a bit complicated. I made it as easy as possible for you guys to follow. So the first one I have, that should not be there. The first one we were looking at is, so how do we get to this? This is called the Fibonacci sequence. So how this works is just, we've got 1 plus 1 equals 2, 2 plus 1 equals 3, and then 3 plus 2 equals 5, 5 plus 8 equals 13, and so on. So how we get to this, how do we get to those golden ratios that I showed you, is we divide the following number by its previous number. Sorry, the previous number by its following number. So I did a bit of a chart just so I can show you. So you can see later on in the pattern we get 8 divided by 13 is 0.615, and then it goes 13 divided by 21 is 0.618. And you can see it moves on until we get around about 0.618, which is the number we'll be looking for. So this is called the golden ratio, and there are 3 more that we use. So the next one we'll be looking at is how to get to the 0.382, which is this one over here. So how we do that is we take the one number in the sequence and divide it by the second number. So we have 21, and then we got 34 and 55. So we take 21 divided by 55. That also works with all the rest of the numbers as well. So the next one we're looking at is also 0.236, which is every third number. So we got 34 divided by 144. So we seek as 1, 2, 3. So we divide that by the third number in the sequence. Okay, so what we'll do now, I'll just quickly show you guys how to use this on a chart. It's pretty simple. It's very effective as well. So we'll dive straight into that, and let's show you how it's done. Okay, so this is the chart we're going to be looking at. So first of all, this is the daily chart on the US dollar, the Aussie dollar, US dollar. You can see I picked this nice trend. So you can see lower the trend, higher the trend, and it's got a couple of good corrections and impulse waves as well. So before I show you how to use the Fibonacci on your charts, I'll just quickly show you how to get them on your toolbar, and also how to insert levels in them as well. And I've already set up my Fibonacci levels. I've also already put them on the toolbar, as you can see here. But if you can't see them, I'll quickly show you how to add them into it as well. So if you right click on your toolbar, you can press customize, and you can they should be, where mine are already here, your Fibonacci retracement and expansion should be in here. You can just select them and press insert to add them up onto your toolbar. Now what you can do then is, if you click on this is the Fibonacci retracement, so if you click on that and drag it up, you can see you've got your Fibonacci levels as well. Now yours will look a little bit different. If you want to edit it, so I've edited mine already looking to the way I want it to look. You can just double click on it, right click on it, and then say Fibo properties. You can see you can edit your comments. So this is your what you want to call that certain Fibo retracement, and then also the colors. And then that line over there, you can edit that as well. So you can either make it if it's thin, you can either choose to make it these sorts of lines, which is dots, or a couple of combinations thereof. Or if you want to make it a bit thicker as well, I put mine on the 2, just so it's a bit easier to see, and I quite like the color. And then if you want to add levels, you can just simply add them in here. Now, the way you want to add a level, I'll just quickly show you, for instance. So you can see here on levels, That is so you want to add that as your level in there, and then what you want to do afterwards is you want to times that by 100. So if we had that number which I was talking about, the 0.326, you can see we added it here as 0.326, and we would actually in the description add it as 0.236, my apologies, and then in the description we will add it to 23.6. So that is multiplied by 100. And then what I've done here as well, this is not part of the Fibonacci part. What I've added here is just so you can see the levels that is actually on. Now how you can do this is you can just press space 5 times and then insert your percentage and dollar sign. Then you will see the levels, the price level that is actually on as well. And then you can also change your colors, and you can change your thickness of these lines. So now that we've got that all sorted out, let's quickly show you how to use it on your chart. So you can see this is the 0 level over here. I've also added mine into array as well, but if you want to just keep it normal, you can click on pyramids, so it's already arrayed. So you can, if you want to array it, you can click on pyramids, and you can see even if I move it, it tends to stay there. Arraying, but that's not too important if you want to use it or not. So there you go. If you want to array it, you can see it doesn't actually move out the way, so it stays there. So it shows across the whole screen. But yeah, let me just quickly show you how to use it. So the way you want to use this is if you draw them to the bottom of your, so this is, you can see this, the start of our trend, and you can move it up to the highest point of our trend, which was there. So for an example, if we had the market way over here and we were looking for a retracement to pull back, we would draw it from here to here, and you can see. So how we use this is on Fibonacci we expect the market to pull back to the 23.6, 38.2, or the 50 or 61.8. This is this section right over here is the majority of the markets will tend to pull back to this section over here, which is the halfway of the previous impulse wave. So now we'll draw it as if the market was in this section. So we will pull it up to here, and you can see if you wanted to trade against this move or look for a potential re-entry of the continuation of a trend for this move as well, we will look for either for entries on this level 23.6. We can also look for levels on 38.2, 50%, or which is 0.5, or we can look for 61.8 as well. So if we move along, as you can see, the market actually moved past that 23.6. So once you can see it actually was quite nice and made a big candle past it. So we could have expected another move coming down to the 38.2. And you can see it sort of did stall on it a little bit, did come a little bit past it, and then continued on to that trend, making a nice big move to the upside as well. And then you can see later on it did. After that, we looked for another move coming down. Once the market started moving down, we can see it actually moved down to around about the 61.8% of the market, which is also 0.618 as well. And you can see if you entered a trade there, you would have made it, could have caught this very nice impulse as well. So that is just the basics of how to use a retracement. You can use them on different areas as well. I'll quickly show you here as well. So you could have used them, implemented over here. So you can see this one should round about. So this one did actually break it, which is fine. You're not always going to be right. And then we look for another one over here. You can see this one over here retraced round about to the 23.6. If we kept moving it up to use this as a whole impulse, you can see this one moved down to the 38.2. And if we use the whole bigger one, you can see this one came down to 38.2 as well. If you want to use this impulse, this big move up over here, you can see this one pulled back all the way to the 50%, and then the bigger move as well pulled back to the 61.8% and did a little bit of a stall there, but then eventually broke down or broke past it as well. And the whole big move coming forward from over here, you can see sort of stalled on the 61.8, but is around about that same area as well. So that is just, like I said, that's just the basics of the retracement. I'll quickly show you how to use the expansion as well. So in the expansion, we measure the market that we expect the market to go to. So we measure where we think the market will go to. So for example, if we measured it back here, you can see this one hits pretty much exactly on that 132.8% of this previous wave. You can see also it stops along the way. We had a stop here on 32.8, another one here on, if you can see it, 61.8, and this one not really on the 100, but we can see it also, it moved on very nicely to that 32.8. So that's just the basics. I'll quickly show you how we can use this to sort of put in our stop losses, where we can use this to put in our stop losses for trading as well. So how we can use this is I'll quickly show you just here on a blank screen over here. So if we have a, say, uptrending market that moves like that, and we can use, then we use our Fibonacci, say our Fibonacci retracement, and we measure that. We can look, and the market does pull back, starts to move back. You can see, and we can start actually entering a trade, putting a buying to the top side and putting our stop loss underneath the 61.8. And then the majority of the time, the market will continue to move down and sort of bounce on either one of these levels. So you can use this, these three ratios to use it as a sort of, I call it the green area, which is the area. If it stays between that area, you can look for the market will usually continue in its trend. And then afterwards that, like I said, placing your stop loss there at the bottom, already entering the trade, and then the market will turn around on either one of these levels. Yeah, so that's just how we can use that in a trading environment, how to use it for your stop loss, and then we can also use it for a take profit as well. So what I mean by using it as a take profit, if we have our extension or our move to the upside and then pulling back, and we can use our Fibonacci expansion. You can see we measure this move and its retracement. We can look for either areas. The most common areas usually I found was the 100 level, the 132.8 level, and the 161.8 level. But like I said, all the other multiples are good as well. So these are all if they do break past these, and we can then look for a move to either hit one of these. So that, like I said, using that as our stop loss for the retracement, and then using this for our take profit areas and Fibonacci and for the trading. So that is it, guys. I hope you guys did enjoy that video. I'll just quickly, so what we covered in this video was where did the Fibonacci come from, how do we get to these golden ratios, and how do we use these ratios in our trading. Hope you guys enjoyed the video. If you guys do have any questions, please feel free to contact us at blackbullmarkets.com, and then you can click on live chat, or you can email us at support@blackbullmarkets.com, and we will get back to you as soon as we can.